Hi, I'm David Daughtry with Copperwynd Financial. A couple of weeks ago when we had a Dave's Talk, we were talking about the horrendous economic data that we saw coming out and that we thought was going to continue. And it has continued. I mean, we're looking at 26 million people in the last 8 weeks that have become newly unemployed. That will probably continue depending upon the opening of states and that a reopening process across the U.S. GDP came out for the first quarter at minus 4.8%, which is actually, people said, well, that's not too bad. But the reality is January and February were not impacted hardly at all. So this was really the middle of March going forward. So if you look at second quarter GDP, some of the forecasts are minus 15 to minus 40%. Huge numbers. And that really assumes that we're not going to all get back to work very quickly here. The markets have responded very, very well to the stimulus that both the federal government have put out and also what the Federal Reserve has done. Most of the markets, the large markets like the S&P 500 and the Dow, they've recovered half to 2/3 of their losses that they had. Some of the smaller markets, small cap, mid cap, international, emerging markets, they haven't done quite as well, but they're still recovering quite a bit, so 1/3 to 1/2. And we've seen real stability back in the bond market that was really rocked, and that's what caused the Federal Reserve to step in a lot. If you look at the Federal Reserve, they met today, the Federal Open Market Committee. Chairman Powell talked about what they're doing. They're going to keep interest rates at 0 for the foreseeable future. And in fact, there's some estimates that they may not raise that for 2 to 3 years. If you look also, they're buying unlimited amounts of treasuries and mortgage-backed securities. And one of the things he mentioned is he said, the federal government needs to do more on the stimulus side, even though they've already done $2.5 trillion. Because his take is, the Federal Reserve can lend money, but it can't just give money. It can't grant money. The federal government's the only one that can do that. And if we look at the stimulus that the federal government's doing, I mean, the $1,200 per person stimulus package, about 90 million people have already received that. And over the next month or two, they're going to get a lot more people that will be receiving it, especially it's really the people that are having to get it by a mailed check. Tens of billions of dollars in airline grants, because that industry is just getting killed. Southwest Airlines this last week forecast that for May, their revenue will be down 95%. You try buying $100 to $150 million airplanes and then only have 5% of the revenue that you had a year ago. It's really ugly in that area, and hopefully they can make it through. If you look at SBA, the Small Business Administration, they reloaded their PPP loan program, and it's $600 to $700 billion. There's probably more need there than that. I think you're going to need another $250 billion. But also the $600 per week in the stimulus for the additional unemployment payment that's coming out. I think you're going to see people that are going to be able to pay their rent. There are people that are going to be able to stay in their offices or stay in their homes. And I think that will hopefully get us over to when people can get back to work. We're actually very positive of how quickly things have gotten back more to normal in the markets. You're not seeing 2,000 and 3,000 point days on a daily basis, both up and down. So people are more comfortable and more confident of what's going on. We're positive, but we realize that a lot of this depends upon what drugs come out, what treatments, what vaccines, because otherwise you're going to have a bigger issue, and we're seeing that. But we're positive. We've invested back in the bond side. We've invested back a lot on the equity side. I would just say, continue to do what you're doing, be safe, be healthy, and we'll be talking shortly. Thank you.